I will comment on the mining tax regime. The Minister announced a reduction of the corporate tax rate for companies that add value to copper cathodes. We think that is a very commendable inclusion in the budget because we need to add value. We are exporting a lot of either concentrate or just copper cathode, and to stimulate growth in the value-adding sectors, that is a very welcome move. We also wish to comment on the 5% import duty on copper concentrates, copper and cobalt. Our observation there, Chair, is that currently refineries in Zambia are operating below capacity. So it's not clear whether that was a measure, just purely revenue measure, and I think we have heard comments somewhat alluding to the fact that that was a revenue measure. But the impact it will have will probably lead to the closure of some of the refineries that we have, because already they are struggling with capacity and they need throughput from, for example, Congo in the form of copper concentrate to allow them operate sustainably and utilize their capacity. If we impose 5% on copper concentrate, what is likely to happen is that DRC, for example, will direct their concentrates elsewhere. They will export to other countries where they don't have to pay that duty, and that will have a very detrimental effect on some of the refineries, especially on the copper belt. We also wish to comment on the mineral royalty, the increase. Mr. Piri alluded to it. We note that there's been a general 1.5% increase across all scales. Then there's a top rate introduced of 10% when the copper price reaches 7,500 per metric ton. Then there was also an increase on cobalt from 5% to 8%. And somehow, whilst these measures might have very valid reasons behind them, the challenge is we are increasing taxes in the wrong cycle because commodity prices, except for cobalt, are going down. If you look at copper, from the beginning of the year, it's gone down 20%. Sometimes sentiment is important. When copper prices are falling, you want to make sure that the sentiment is positive. This is probably a measure that could even have waited, for example, until we really had something to tax. We are literally taxing at a point when the copper price is about 1,500 below the 7,500. So we are sending a negative message, a sentiment that's negative in terms of increasing taxes at a time when we don't really need to, because we know probably projections are with China and the US arguing about tariffs, that 7,500 is unlikely to be reached anytime soon. We also just finally wish to comment on the debt. I think the Minister alluded to the sustainability of the budget, and many of these measures we have seen that part of the challenge, other than the VAT refunds, for example, on sales tax, part of the drive is really to just make sure that we can be sustainable and reduce debt levels. Our comment there would just be that we probably need to look both at expenditure and revenue. It's difficult to be sustainable with regard to debt, focusing only on revenue. That's a very one-sided approach. We probably need to look at expenditure as rigorously as we look at revenue. Thank you very much.
Good afternoon, Chair. I'm George Chitwa. I will talk to the measure that the Honorable Minister proposed in respect of limiting the deductibility of interest expense in determining the income that a business makes for tax purposes. For purposes of context, Chair, when a company, say for example a manufacturing company, buys equipment, and let's assume they buy equipment worth 10 million kwacha in order to, say, expand their capacity, and they finance this through a loan, let's say at 20%, their interest in that year will be 2 million. If in that year they make only a profit of 1 million, under this proposal, Chair, they will only be allowed a deduction not of the 2 million interest that they incur, but only 300,000 kwacha. Now, what that means, Chair, is in essence the additional 1.7 million kwacha is completely written off and will never be taken into account in determining the tax that they pay. As a starting point, I should mention that this measure comes out of global best practice because globally what governments have sought to do is to close loopholes on tax avoidance, because what some taxpayers would do is they would borrow a lot from related parties in order to pay little tax at the end of the day because they would write off that interest expense. So in an intention to close this loophole, the G20 working with the Organization for Economic Development, Economic Cooperation and Development, came up with a number of measures, including this particular measure. And the Honorable Minister now proposes to bring it into law. So much as we, while we applaud the effort to take measures to bring us up to standard with global best practice, our comment is that we should try and customize some of these provisions to our own economy, because some of these measures are meant for developed economies. And as a matter of fact, with the OECD putting this in place, they took this into account, and what they recommended is countries can be allowed or can consider a range of from 10% to 30% allowability or disallowance. And in addition to that, there are measures, like in my example, where you have a company, a manufacturing company spends 2 million in interest, but can only write off 300,000. What they've recommended is, well, consider a carry forward of the excess 1.7 million to future years, so that the given company or taxpayer can enjoy tax deductibility of such interest. They've also recommended, in addition to that, that you consider in cases where, say for example, the company in question belongs to a multinational group, which for business reasons, say for example, they're in an industry that requires a lot of debt capital, take into account those measures by looking at their own interest levels and try then and increase the amount of interest that they can deduct. So we applaud the fact that we are aligning ourselves to global best practice, but our recommendation, Chair, is that even as we do so, we take into account the additional recommendations that the OECD that came up with this document have proposed, that we don't just limit it to 30%, but we allow a carryover of interest. And in years when a company makes a loss, we allow all of that interest to be carried forward to future years so that the taxpayer can enjoy deductibility. Great. Thank you, Chair.
Okay, thank you very much. I assume you have finished with the highlights. And I think for the next 5 or 10 minutes, the members can ask questions. One question at a time, and very brief answers so that we maximize. Honorable Kunda, and then Honorable Makando, Honorable Malama, and Honorable Daka. Those 4 questions.
Yeah, thank you.
Just write them so that you answer them at the same time.
Thank you very much, Mr. Chairman, and let me take the opportunity to highlight that I've enjoyed the submission. Very enlightening. You know, it has given me some hope, but in the same vein, I'm wondering whether they have had an opportunity to engage, you know, the people who are preparing the budget, because looking at the issues that you have raised with the tax, the sales tax and the VAT, it gives me an impression that maybe they did not have an opportunity. That's the question I want to find out. Did you engage, you know, the people preparing the budget before it was even brought to Parliament?
Okay.
Thank you very much, Mr. Chairman.
Let's get all the questions in. I think there are three.
Thank you.
Makando.
Thank you, Mr. Chairman. I believe that you are the right people to answer this question, and I reserved it for you. The theme of this budget is consolidating fiscal fitness. We can finish the sentence. Consolidating fiscal fitness. Is there anything you can see in this budget that consolidates fiscal fitness? Is there anything, is there a strategy? Are there measures that point to consolidating fiscal fitness?
Honorable Malama.
Thank you, Chairperson. If you go to page 9 of your submission, under 6.0, restructure the current turnover tax regime. You've made the observation that there is a flat tax rate of 4% on turnover. Would this proposition assist create jobs, or is there a rate that you think would stimulate particularly the SMEs to create jobs and be a solution to so many of our young people who are unemployed? Thank you.
Honorable Daka.
Thank you, Chair. I want to thank them for the good submission. I heard the other speaker before the last one saying that we were surprised that things turned the way they turned, meaning that there was a discussion between yourself and government. Now that we are closing the gates, when the horses have already bolted, what is the remedy that we can give to mitigate the factors that you think that we'll be losing, instead of it will be soup costing more than the meat? To collect the sales tax, we'll be paying more money than what we should collect. As accountants, what do you see is the remedy to give to government to ensure that we correct the situation? Thank you.
4 questions. Bullet answers. Did you engage? I'll be saying them so that the answers are less long. Did you engage Minister of Finance or ZRA before they came up with these measures?
We engaged them, yes, before they came up with the measures, but what came out of the measures is what surprised us.
Okay.
Thanks.
The second question is, would the 4% tax rate help to create jobs, especially boosting SMEs?
Yes, that's a very positive measure. Turnover tax of 4% is very positive. The graduated rates were confusing the small-scale business persons. A flat rate is more ideal. Even 4%, we think that would be fine.
Okay. Honorable Daka wants to know, you engaged them, but you think they did something else. At least now where we are, it's not over yet. We're still reviewing the budget. What would you propose to mitigate this situation?
That consultations are held with various stakeholders that are impacted negatively by these measures to try and reach an amicable solution that will move everyone forward.
And finally, Dr. Makando. We'll come to that later. It's now a question of time. It's a rider, like a second question. Okay, let's.
Stakeholders sometimes sounds too late. As accountants, 1 + 1 is not 10. We are looking at figures here. We are looking at the yellow book here. What can we do instead of reinventing the wheel, going around the country, bringing all the stakeholders? You as accountant, you have the direct way of looking at these issues. How can we resolve this issue very quickly because this budget has got very little time as we are now at this stage. You cannot be removing the goalpost when somebody wants to score. You move it this way. The process has started. We'll be finishing the budget very soon. What can you add on to mitigate the already focused issues that you have raised? Thank you.
Chair, I think the concern, there are measures in the budget where we have concerns, but there are tax rates and so on. The sales tax is where we probably would caution and say there needs to be a slowdown because it's very technical and there's a lot more consultation, and that's a measure I think has been announced for next year. It can wait maybe until 2019 in our view, 2020, 1st of January 2020, to allow a proper transition.
Okay. And then the last question from Honorable Makando is the theme of the budget. Is there anything in the budget that you have seen, strategy, that points to the theme of fiscal consolidation?
I must confess, Honorable Makando always asks very difficult questions. The intention was fiscal consolidation, and there might have been sincerity in achieving fiscal consolidation, but as to whether it will be achieved, we think that it will be extremely challenging.
As we close, tax measures receive a lot of input from ZRA, and ZRA is full of your members, accountants. So we can safely say these tax measures were proposed by accountants, safely, because these are accounting issues, and these are your members, isn't it? Like an accountant in Zambia can't practice without being a member of ZICA, isn't that correct? So these members of ZICA who advised the Minister of Finance that these measures are workable, sales tax from VAT, royalty tax, these are accountancy issues by your members. Are you saying that these are renegade accountants?
Thank you, Chair. Enjoying the immunity that is vested on us, I can safely say that even our members at ZRA were surprised by the measure.
I hear this is the last part of my questions because we are closing now, but you are very keen. And I must say, this is an impressive submission compared to last year. You've done a better job. I think you deserve to be aware that the members are impressed because they look a lot to you for this kind of advice. Copper in Zambia, the mineral royalty and so on, you sound like you really don't think the tax measures are fair on the mines from what you have said. Almost all the copper sold from Zambia doesn't go to the final clients. It is sold to companies that are based in Switzerland. And then they sell it to China, them. And some people think most of those companies that buy our copper are related to the companies in Zambia that produce our copper. And through that, they're able to transfer issues and play with transfer pricing and all that. The research has been done by ActionAid and a lot of others. Secondly, because I want you to reflect together for the mines, we've learned from other witnesses that some mines have been declaring losses for more than 10 years. I think there are only 3 or 2 companies that declare profits in the mines. Chinese company and I think a few others. Zambeshi, I'm told. But most of the other mines have been declaring losses, and yet they don't close. That's what some stakeholders have been saying. They don't close, but they're still making losses. This kind of information, does it sound accurate to you? And does it point to the mines taking advantage of our economy and wanting to get away with all the money and leaving a black hole in the ground? That's what some people think. And now you've come and you're saying, no, these measures are not fair to the mines. Well, what would you say? We want to learn because you are the tax experts. What should we pick from all this noise?
I'll have a go and maybe my colleagues will help me. In terms of pricing of copper, I don't think we should be having a problem with that because the copper is referenced to the London Metal Exchange pricing mechanism. And so it's not a price that is only determined by a mine in Zambia and its buyer. When Zambia Revenue Authority is collecting mineral royalty, it collects it on the basis of the London Metal Exchange price in a particular month. And so we think that really the concern on maybe some transfer pricing arising on the selling price may not necessarily be a very accurate reflection, because unless we suggest that at London Metal Exchange there's collusion.
I think
yes.
I didn't mention price.
Yes.
I said the producers of copper in Zambia sell to companies based in Switzerland, which then proceed to sell the copper to the final users of copper, which is mostly China.
Indeed.
This selling to middlemen who are not themselves not producing copper, selling to middlemen instead of selling directly to China. The price, I understand. This selling to middlemen based in Switzerland, which is a tax haven, sends some signals to some people. And we want to know, because this is noise to us. We're trying to get facts from you, the accountants. So this is not about the price. Why sell to a middle person before that middle person sells now to the final buyer? That noise brings question marks. Action Aid has raised question marks. And we wonder why they don't sell directly. Secondly, they've been making losses according to the information that's in the domain, but they don't close. 10 years of losses, but they're still operating. Now, this noise raises question marks to us as a committee, whether the mines want to rip off this economy, or they're too clever for ZRA, or generally they are getting away without really leaving behind something. We go and borrow money abroad. Meanwhile, our friends here are making more money, some of which they should be able to pay into our treasury. So those question marks, what would you say?
Chair, I think we understand the concerns around that issue. In our view, there are problems that can be fixed with taxation, and there are problems that can be fixed with enforcement. And if there are concerns around transfer pricing, we all as professionals subscribe to standard ways of testing transfer pricing, which is what we would recommend that the ZRA utilizes. So even between those transactions with middlemen, there are standard measures and metrics you can use to determine whether that price is reasonable or not. And we should resort to that rather than taxing. Because if we tax a problem we don't understand, what if we are wrong and genuinely these companies are making losses? It means we put them in a more difficult position. We shouldn't tax problems we don't understand. Our aim should be to understand them fully, and if it's pricing, study the transfer price. And then if we indeed prove there's an issue with transfer pricing, that's how we enforce it, rather than through raising rate.
Okay. I was going to add, Chair, that trade through these traders is not unique only to Zambia. I think the nature of the commodity gives itself to having these traders who want to buy, and then they speculate. When the price is higher, then they release. Sometimes they buy in bulk, they just hold in warehouses or at sea, and when they see that the price of the commodity has gone up, they create an artificial shortage, then they offload on the market. But that may not have any collusion necessary with the mining company. There are some mines that have been making losses, maybe as a result of transfer pricing, but there are also some mines that have been making losses just because of the sort of ore body that they have acquired. And like my colleague was saying, you cannot have one solution to all that they are all stealing, because there are some who may genuinely be having problems which they've inherited because of the way the engineering has been done to mine the ore body. It wasn't very well done, so they end up making perpetual losses.
Good. I think we can end on that fair note. That's a very good summary you've made, because you haven't said they are all innocent and you haven't said they are all guilty. I think that's a fair point to end this discussion. We've come to the end of this interaction, and I think that you've been very helpful in unpacking issues, and I'm sure the honorable members are more enlightened than they were before you came through, especially on tax issues. You are the experts. The immunity that was granted is hereby removed. But have a good day.